Welcome to the Chrisman Commentary, daily mortgage news podcast. I'm your host, Robbie Chrisman. Topics on today's episode include visibility. Yes, that's economic reports, quarterly earnings, and just what the heck is going on in the M&A space. My interview with Truework's Randy Lightbody on the Fed's recent rate cut and its impact on borrower behavior, what lenders should watch for, and how homebuyers might respond to lower rates, as well as the critical role of integration and automation in building a more efficient, sustainable path to homeownership. And just how do we know that the economy is slowing, leading to lower rates if we're getting no readings on the economy? Looking for an all-in-one automated VOIEA platform that helps mortgage providers achieve up to 50% cost savings and industry-leading 75% completion rate? Look no further than Truework. You can learn more at truework.com. President Trump has recommended that publicly held companies only report earnings every 6 months instead of 3. Don't stockholders deserve more timely information to make educated choices, not less? For example, bond market investors who rely on government releases to make decisions seem nearly frozen in their tracks, and the government has only been shut down for about a week. Speaking of learning information, thank you to everyone who wrote in yesterday reminding me that given the Fifth Third Comerica news, Comerica Bank exited the warehouse lending business in 2023 during the regional bank liquidity crisis. But I digress slightly. Headlines to open the week revolved around surprise political developments in Japan, where there was a new pro-stimulus leader who's incoming, and France, where the old prime minister is outgoing. With the September employment report and plenty of others delayed by the government shutdown, speculation abounds over just who in Washington might have early access to the data. The mystery hasn't stopped investors from increasingly pricing in a 25 basis points Fed rate cut by month end, with futures implying a 96% chance of easing and another cut likely in December. As the October Class A cycle begins with a sparse economic calendar that includes no major Fed speeches or Treasury auctions, attention turns to the FOMC's September meeting minutes for insight into the committee's divided outlook. One overlooked trend in the current market is how aggressively large servicers are moving to retain servicing through recapture strategies, essentially ensuring they control the borrower relationship from the start. While some of this can be attributed to limited float or strong demand for specified pools, there's growing evidence that payups are bleeding into more generic note rate pricing, especially on XSIOs. Correspondent buyers aren't acting alone. Both GSEs have been steering sellers into excess strip executions, even on familiar note rate windows. Last week's performance in the UMBS 30-year stack showed stronger demand for lower coupons, which are expected to benefit from slower prepay speeds. In contrast, higher coupons are likely to see an uptick in speeds when data prints later today. For now, the best carry appears to be in 3.5% conventionals and 5.5% Ginnies. While 5.5% and 6.0% coupons still dominated gross supply last month, the 5.0% is gaining ground amid the rally. For those seeking prepayment protection and higher coupons with incentive low pay-up stories, that's investor, Florida, high LTV, and FICO-centric pools, they remain attractive, especially as refinance risk fades. Encouragingly, recent strength in the market has helped ease payups for larger loan balance pools in higher coupons. That's those at $300,000 amounts or more. For today's interview, I wanted to welcome to the show Truework's Randy Lightbody to discuss the Fed's recent rate cut and its impact on borrower behavior, what lenders should watch for, how home buyers might respond to lower rates, and the critical role of integration and automation in building a more efficient, sustainable path to homeownership. He's head of mortgage at Truework, bringing nearly 4 decades of experience to the company in the name of accelerating Truework's mission of transforming income and employment verification. Last month, we finally saw a rate cut from the Fed. Another rate cut is expected later this month, although economic data or lack of economic data might change that. From your perspective, how is this cut or this easing cycle going to influence borrower behavior in the near term? And I guess what should lenders really be watching for in terms of signals?
Thanks, Robbie. Appreciate the question and nice speaking with you. But as it relates to rate cuts, they make headlines overnight, but it really takes months to see how it really shapes the perspective home buyer behavior. And like the last couple of Fed cuts, rates went up, not down. Actually, the 10 years up since the last cut again, frustrating. I do think there is hope as we enter Q1, though. It certainly is tempting to think a cut automatically means demand surges, but it's more nuanced than that. What really matters is whether borrower feels the savings are meaningful against high home prices, which remain elevated. Lenders are watching as application volume is up in the last few months, especially in the consumer direct channels, but also credit quality is shrinking, especially on the lower part of the credit wheel. And how many of those applications actually make it to the closing table are really the most important.
Well, speaking of homebuyer behavior, Truework released a recent homebuyer report that talked about how important it is to people to get a good rate and how much they're betting on a refinance. And certainly I can attest to that. It seems like every conversation I have with friends is along those lines at some point if I'm catching up with them since they know I work in mortgage. Now that we've seen kind of this rate drop versus highs earlier in the year, how do you think home buyers will react?
Well, they're going to wait and see, can I refinance? Is it actually an opportunity in the future to do so where rates fall enough to actually save them money in the long run? The homebuyer report we did, which had amazing results, picked up very widely. We actually saw more than half the buyers are counting on refinancing into a lower rate. A cut like this fuels optimism for sure. But as we all know, who've been in the business a long time, refinancing isn't always the silver bullet people hope and think it is. You factor in closing costs, timing, and whether rates keep moving down. Sometimes might outweigh efforts. The efforts outweigh the reward. But the lenders certainly love it. At the end of the day, though, what comes through loud and clear is that people go to great lengths to pursue the dream of home ownership, even if it means on betting on a future refinance and buying that house now.
Yeah, it is kind of astounding considering in basically all large metros across the U.S., it's cheaper to rent than to own currently. Yet people are determined. They're determined to achieve home ownership. So where do you see the industry's responsibility and I guess opportunity to make that dream a reality in a way that's sustainable for people?
Yeah, hopefully lenders and of course the agencies do see it as our collective responsibility to help as many as possible achieve that dream. One way is when the lenders cut back on manual processes. It creates room to pass along those savings to the borrower. Robbie, one of the things we've seen, and one of the biggest ways that the industry can actually help is by making the process more automated and more efficient behind the scenes. For lenders, a lot of costs still get caught up in manual processes, which is amazing to me. Chasing down verifications, delaying delays, reworking files. When the information isn't accurate, it really takes a toll and doesn't let your processing team really do what they are meant to do, and that's close more loans. Ultimately, it trickles down to the borrower and a higher cost and more stressful experience, which is not necessary. I think 8 of the top 10 lenders, Robbie, as our customers, we are helping the mortgage banking community automate and streamline income, employment, and asset verification with a singular solution so they can significantly reduce those operational costs by over 50%. We're not only saving lenders money and time, they're also passing those savings along with more competitive rates, faster closings, or just a smoother overall borrower experience, which also our homebuyer report said was really as important as anything. At the end of the day, every dollar we help lenders save gets the industry closer to making the dream of homeownership more attainable, we think.
Yeah, we are almost in this era of efficiency. So how big of a role does integration play in creating the efficiencies we've been talking about?
The efficiencies are critical, right? Lenders don't need more tech. They just need tech that works better together. But the integration piece is really where the biggest impact happens. Lenders have plenty of tools, but when these systems don't talk to each other efficiently, it creates duplicate work, manual steps, unnecessary costs. We see the real gains come when verification processes are built directly into the workflow lenders already use. That's when teams can move faster, reduce errors, and ultimately cut costs. We've been doing some stuff, Robbie, such as our free pre-approval verifications inside of POSs and OSs as one example of automating income and employment upfront with free pre-approvals while keeping it connected to the lender's existing platforms. The beauty of this approach is borrowers now have a smoother experience. Lenders know right up front if their pull-through is going to be better because it's a free pre-approval of their income and asset and employment. And they can generate reports that are likely to meet D1 CNA requirements without extra back and forth. It's a subtle change in how to use technology, but it makes a huge difference in efficiency and compliance.
Yeah, and I can certainly attest to that. Any other ways that the Truework's helping lenders automate and drive efficiency across the entire mortgage workflow that are worth sharing here?
Yeah, our comprehensive and singular automated platform does orchestrate the best possible outcome to a completed verification, not just a hit rate. In verification space, people talk about hit rates. It's not about that. What do you get that's completed, that's usable data? Our focus has taken on what's traditionally been this fragmented manual process, embedding it directly into the lender's workflow. This allows for the modern version of verifications of employment, income, and assets, saving lenders millions of dollars off their verification bill, which usually includes the work number. Simply put, we're a singular waterfall that gets lenders 75% completion rates and cutting costs over 50%. Actually, we're saving one company over $8 million in annual cost as one good example, Robbie.
Holy smokes, that's a big number. Yeah, for people looking
Amazing.
for more information or ways to at least start the process of working with y'all, what are best next steps?
Yeah, certainly visit us at our website, truework.com, or we'd love to connect at the upcoming NBA Annual in a few weeks in Vegas. You'll be at booth 719. Stop by, chat about the verification process in our raffle. We're giving away $500 airline gift cards to a couple of lucky winners. Or directly email me, Robbie, at rlightbody@truework.com for a private meeting. Look forward to it. Really appreciate your time today.
Excellent. Well, I appreciate your time today, and I wish you and Truework the best of luck going forward. Thank you very much.
Thanks, Robbie.
The trade deficit in August would normally kick off today's economic calendar, but is expected to be delayed due to the government shutdown, leaving Redbook same-store sales and consumer credit for August as the only other data. Treasury activity will be headlined by an auction of $58 billion of 3-year notes, and markets will digest remarks from 4 Fed speakers: Governor Miran, Atlanta's Bostic, Vice Chair for Supervision Bowman, and Minneapolis's Kashkari. We began Tuesday with agency MBS prices basically unchanged after Monday's close, the 2-year yielding 3.60, and the 10-year yielding 4.17 after closing last Monday at 4.16%. Let's wrap up with a joke and some housekeeping. A woman whose husband often came home drunk decided to cure him of the habit. When Halloween night approached, she put on a devil suit and hid behind a tree to intercept him on the long way home. When her husband came by, she jumped out and stood before him with her red horns, long tail, and pitchfork. "Who are you?" he asked. "I'm the devil," she responded. Taking his hat off, he said, "Pleased to finally meet you, sir. I married your sister." Thanks again to Truework for sponsoring today's podcast. Truework is the only all-in-one automated VOIEA platform that helps mortgage providers achieve up to 50% cost savings with an industry-leading 75% completion rate. To learn more, visit truework.com.